apuntan a más subidas de tipos de interés para este año, para este 2023. Y ya que hemos contado cómo están los mercados, ya saben también las noticias más importantes de las últimas horas, llega como siempre en esta casa el momento del análisis, llega el momento de los mejores analistas. Hoy, además, un analista internacional. Contamos con Jay Kaeppel, es Senior Research Analyst at sentimenttrader.com y ya está por aquí con nosotros. Hi Jay, thanks for coming here for Noces Televisión.
Hello, how are you?
Jay, I would like to speak with you about some of the worries on the market. For example, the yield curve, the longer term bonds, for example, the bonds at 10 years. What is happening with these bonds and with this yield curve?
Well, in the market right now, we're seeing a pullback. I think a big part of that is the action of interest rates. Not only are they rising, which is typically a weight that something weighs on the market, but the yield curve is inverted, and it's been that way for some time now, but people are kind of re-examining that situation. And the first chart that I have today shows the yield on 4 different U.S. Treasury securities. And in an ideal market, the 30-year Treasury bond should reasonably pay a higher rate of interest than a 3-month T-bill. When it doesn't, that's a sign of something is amiss in the financial markets, and that's where we're at right now. The 3-month T-bill is paying over almost 5.3%, which is almost a full percentage point more than somebody locking their money up for 30 years. So people are aware of the equity curve inversion, and it's been going on since almost August of last year. But what a lot of people don't realize is the way it impacts the economy. Typically, it accompanies or precedes a recession. But the thing is, sometimes that recession is imminent, and sometimes that recession doesn't happen for some time. In other words, there have been cases where it's been almost 2 years since the inversion of the yield curve before a recession starts. So it doesn't mean there's a recession imminent right now, but it means we still are at risk into about the middle of 2024. So I think in the short term, some of those things are weighing on the market.
Jay, you are telling that the recession is not imminent, but how can we avoid this recession if we can?
I'm sorry, are you asking about a recession? I'm sorry, I missed the question. Yep. Okay, well, yeah, I'm sorry. So if you're asking about a recession, yeah, so like I said, there's no real signs of it at the moment. There's a lot of warnings out there, but I think the stock market in the late last year and most of this year discounted the fact that there was going to be a recession in 2023, but we're still not out of the woods for 2024.
Yeah, you have a model, the aggregate signal model, that is crossing particularly favorable threshold. I would like to ask you for that. What is this and what is happening?
Sure. The second chart that I have today, at Sentiment Trader, we have a number of mechanical trading models that we follow, and we have something called the aggregate signal model, which, as the name would suggest, measures how many of those are bullish at a given point in time. And one study that we've done, we found when the 10-week average of this particular index rises above 0.58, that tends to be a bullish sign for the market. In other words, it means things are trending in the right direction. So for longer-term investors looking for something to kind of reassure themselves, on that second chart, the S&P 500 index is at the top, and the red dots indicate the signals. And if we look down at the bottom, the win rates are very high, which means basically it suggests a good probability of higher prices in the year ahead. No guarantees, but it's a game of odds, and this one looks pretty good.
Jay, I would like to ask you about the percentage of industries in a bear market. in this moment it has ticked about 10%. Is this a risky trend, or I don't know? Can you explain us?
Yeah, this is the third chart is a similar but different indicator. It looks at the percentage of industry groups that we follow, and there's 23 of them. What percentage of those are in a bear market? And a bear market is defined as 20% or more off its highs. And this one is a little interesting because basically what we found is that when that number moves above 10%, which technically is trending in the wrong direction, you want it to always be zero in a perfect world. The bad news is sometimes when that index rises, it will accompany a bear market. However, if we look at the chart and the results, what we find is more often than not, a pickup in the percentage of industries in a bear market accompanies a pullback, a normal correction in a bull market. And so, again, this is hopefully something that longer-term investors can hang their hat on and say what we're experiencing right now in the month of August is a normal correction in a bull market.
The last question, Jay, I would like to ask you about the unleaded gasoline. It has rallied 30% in a month and a half, and I want you to explain this subject, the unleaded gasoline.
Sure. So, nothing riles people up more than rising gas prices. It's a scary thing. And there are many factors that influence the price of gasoline, so it could continue to rise. However, what we have found shown in the fourth chart, unleaded gasoline and gas at the pump also has a strong tendency to decline in price from the end of July through into like January of the next year. In fact, to put a number on it, in 24 of the last 31 years, gas prices have declined from late July to middle of January. So about 80% of the time. So it doesn't guarantee a decline this year, but at the top of that first chart, it shows the annual tendency for unleaded gas futures. And in that red box, it's fairly obvious what the tendency is in the second half of the year. And the bottom of that chart is basically, had a trader been unfortunate enough to go long in the unleaded gas futures market every year since 2005, during that period, that would be their equity curve, just a nonstop, almost series of losses. So we're going to keep a close eye on it. This also affects the energy sector, which has been the top performing sector in the last several months. A lot of people are climbing on board and they're looking for it to break out. But if the energy sector does not break out in the near term and starts to roll over, this chart suggests that the energy sector could run into some trouble in the second half.
Well, Jay, thanks for coming here for Negocios Televisión. Nice to meet you, and we'll see you so well here in this house. Thanks for coming.
Thank you very much for having me on.
Bueno, pues hemos tenido a Jay Kaeppel, un gran analista que sobre todo nos deja un titular